the global financial system is shaking. In a move that stunned Washington, Saudi Arabia, America's longtime ally and the world's top oil exporter, has agreed to accept Chinese yuan instead of US dollars for part of its oil sales. And the trigger? Donald Trump's sweeping tariffs on foreign goods, which many analysts say pushed Riyadh to pivot toward Beijing. This isn't just about trade. It's a geopolitical earthquake that could change the future of the US dollar, the global oil market, and America's role as the world's financial superpower. So today, we'll break down why Saudi Arabia made this shocking decision. Section 1. Trump's tariffs, the catalyst. The story begins in Washington with an aggressive economic policy that shook allies and rivals alike: Donald Trump's tariffs. From the moment Trump doubled down on his America First agenda, tariffs became his weapon of choice. His administration imposed heavy duties on hundreds of billions of dollars worth of imports: steel, aluminum, petrochemicals, cars, even agricultural goods. While China was the primary target, the Middle East was caught in the crossfire. For Saudi Arabia, the blow was sharp. Its steel and aluminum exports, which had been growing steadily in the U.S. market, were suddenly slapped with tariffs of up to 25%. Its petrochemical companies, which depend heavily on exports, faced new restrictions. Even basic goods from the kingdom were no longer competitive in America. To Riyadh, this wasn't just an economic inconvenience, it was a breach of trust. For decades, Saudi Arabia had been one of Washington's most loyal partners. It aligned with American foreign policy in the Middle East. It bought billions in U.S. weapons, keeping American defense industries booming. And yet, despite this loyalty, Trump's tariffs treated Saudi Arabia like any other competitor, as though the alliance meant nothing when it came to trade. This hit at the heart of Saudi leadership's thinking. If the U.S. could weaponize its economy against allies without warning, what did that say about the future of their relationship? At the same time, China was offering a completely different path. Beijing bought more Saudi oil than anyone else, with demand only growing. It promised major investments in Saudi Vision 2030, the kingdom's plan to diversify its economy. And most importantly, it offered payment in yuan, sidestepping Washington's economic grip. The contrast couldn't have been clearer. America was punishing Saudi exports, while China was embracing them. America was demanding loyalty under its rules, while China was offering partnership on Saudi terms. In Riyadh's eyes, Trump's tariffs were more than an economic decision. They were a wake-up call, a signal that the U.S. could no longer be trusted as the sole anchor for Saudi prosperity. That realization set the stage for one of the most dramatic financial shifts in decades: the decision to start accepting yuan for oil. Section 3. What this means for the petrodollar. Here's where the alarm bells ring in Washington. The global supremacy of the U.S. dollar rests on two pillars. 1. Being the world's reserve currency. 2. Being the currency of oil trade. If Saudi Arabia, the very nation that helped create the petrodollar system, is now willing to sell oil in yuan, it signals something extraordinary. The dollar's monopoly has been broken. Other nations may follow. Russia already trades oil in rubles and yuan. Iran bypasses the dollar entirely. Even India has begun experimenting with rupee-based oil deals. Section 4. A quick look back. The birth of the petrodollar. The petrodollar didn't appear by accident. It was engineered. In the early 1970s, after President Richard Nixon ended the gold standard, the U.S. faced a huge challenge: how to keep global trust in the dollar. The solution was simple but brilliant. Washington struck a deal with Saudi Arabia, the world's biggest oil exporter. Riyadh would price its oil exclusively in U.S. dollars. In return, the U.S. guaranteed Saudi security and supplied advanced weapons. Section 5. Immediate impact on the U.S. economy. So what does this mean for Americans right now? If global demand for dollars falls, the U.S. economy faces serious challenges. 1. Weaker dollar. Less demand pushes the dollar down, raising the cost of imports. 2. Inflation surge. Everyday goods from food to electronics become more expensive. 3. Higher interest rates. To keep foreign investors buying U.S. debt, Washington may need to raise rates, squeezing businesses and households. 4. Debt risk. With over $34 trillion in national debt, America relies on the world buying its bonds. If demand drops, financing that debt becomes far more dangerous. The stakes couldn't be higher. This isn't just an abstract economic issue. It's about whether the U.S. can sustain its lifestyle and global influence. Section 6. China's grand strategy. Make no mistake, This isn't just a Saudi decision, it's part of China's larger strategy. For years, Beijing has pushed to internationalize the yuan. By convincing Saudi Arabia to accept yuan, China takes a giant leap toward that goal. Every barrel of oil sold in yuan strengthens China's currency. Countries that buy Saudi oil will now hold more yuan reserves. Over time, this could create a new financial ecosystem centered not on the dollar, but on the yuan. Unlike the US, China ties its trade deals with infrastructure, loans, and investments, making the yuan option more attractive for developing countries. For Beijing, this is more than economics. It's about rewriting the rules of global power. Section 7. What Saudi Arabia risks. Of course, this bold move isn't without risk for Riyadh. For decades, its survival has depended on U.S. military protection. American bases, weapons, and diplomatic support shielded Saudi Arabia from rivals like Iran. By shifting toward China, Saudi Arabia risks losing parts of its U.S. security umbrella, facing retaliation through reduced arms deals or sanctions. Section 8. The broader geopolitical shifts. The ripple effects of this decision go far beyond Riyadh and Washington. Europe may find itself caught in the middle, pressured to use yuan for some oil trades while still tied to the dollar system. Developing nations under U.S. sanctions could embrace yuan oil trade as an escape route. Global finance could split into two competing blocks, one dollar-centric, the other yuan-centric. We may be witnessing the birth of a multipolar currency world where no single nation controls global trade. Section 9. What this means for Americans. For everyday Americans, this isn't just a distant geopolitical drama. It has real consequences. Gas prices could rise if the dollar weakens in oil markets. Imported products, from smartphones to clothes, will cost more. Federal spending may shrink as borrowing costs rise, and America's global influence will be harder to maintain, reducing its ability to shape world events. In short, a weaker petrodollar means a weaker America at home and abroad. Section 10. Is this the end of the dollar? Now let's take a step back. Is this the end of the dollar's dominance? Not yet. The US dollar still accounts for nearly